what's up traders? Kris Kaappri here, secondsguysforex.com, where we change the way you think, trade, and perform. The trade I want to focus on in today's video is this euro-dollar trade. And so just to kind of get into the details, you can see I'm long from 21.71. Here's the current price. My stop loss was at 21.42, so a 29 pip stop. And my target is 24.50. What I would like to do in today's video is talk about the price action context. Then I want to talk about my trade location, how I entered the market, how I chose my stop loss and take profit, and why. And so again, just to recap, entry 21.71, stop loss 21.42, and take profit at 24.50. So let's get into this trade a little more. Okay, so what we're going to start with is kind of a top-down analysis. We're going to start with the daily time frame, and then we're going to kind of go down from there. Now, my particular approach to trading is I have a very specific framework for how I spot trade setups, which strategies I choose, what are my trading locations, stop loss, take profit. It's a very specific framework that we're very clear about, and that's what we teach our members. And so I'm going to share some of this framework with you. So the first thing I like to do is establish the price action context, and I do this through a couple different pillars, but I'm going to talk about the overall structure today, the trend that the market is in, where I see key support and resistance levels, what I see going on in the market. And then I'm going to talk about how I chose my trade location, why I chose my take profit, stop loss, and everything. So as I've been mentioning in my market commentary and trade ideas during the week, I've been very bullish on the euro, and I've talked about how the long-term trend is bullish. If we look at this kind of chart, you can kind of see that, in fact, let me zoom out a little bit, that we had this long-term range that lasted for a couple years, and then it broke it late last year. And since then, it's been pretty much above this entire zone. And so we've been buying euro, and we've been buying euro a lot as of lately. And we did this recently. So we had kind of this leg up, stabilized, and performed another leg up. And for those of you who have seen my video on impulsive and corrective moves, you can kind of see the structure in place here. You can see impulsive, corrective, impulsive, mostly corrective. Impulsive move, little pullback, prior support, which we bought and talked about prior. Impulsive, corrective, impulsive, and then we get a sharp counter trend impulsive sell-off. So we kind of run into some sellers at 125. The market finds a little bit of a base right about here at 122, and it goes exactly to the prior highs, makes a little bit of a false break, and then that's it. Now, when that happened, this basically told me that, okay, we've rejected twice here and we found support. I don't think the bull trend's over, so I want to be buying on pullbacks or on a break of the range. And so usually when you kind of see these corrective structures at the top, the market will kind of go sideways for a little bit, and more often than not, it will break out to the upside than the downside. If it breaks the downside, we'll trade that. If it breaks the upside, then we're just going to get more and more long. So after rejecting here, the real question was, where would I want to get long on the euro dollar in a pullback? And I felt like there were two locations. The first was this one right here. And the second one, when I break this down on kind of a 4-hour chart, is right here. And the reason being is this is kind of, if you look at this kind of impulsive and corrective structure, the market had found a base here, and this started the final leg up to make the most recent highs or most structural highs. And so I felt like there would be a pretty good basis for buying here. You could have bought here, which would have been totally fine, but you would still want to put your stop loss below this, because this is kind of this structural support that created the most recent highs. And so there should be a fair amount of medium-term and short-term bulls that be willing to want to defend this. So when we kind of look at where the low of this is, you can see it's kind of around 65, 67-ish. And so if you remember from my trade order, I put mine at 21.71, which is right here. So I give just a few pips room, and I give it a few pips room, and just bought just a few pips above the level. Now, I did not wait for any sort of pin bar or engulfing bar or any sort of signal 1 or 2 bar candlestick pattern. Those I've talked about many times before will cause you to miss many trade opportunities. They give you a worse risk to reward ratio. They do not increase your accuracy. So they really offer no statistical edge for you at all. I just bought at the level, and I just had a limit order that was sitting there. As soon as the price got there, it bought it. I didn't care about what the price action was looking coming into it at that time. I felt like the overall price action context was in place. The bulls are still in control of the market. They're going to be buying on pullbacks, and I think this is a good location. So that's pretty much the trade in terms of how I entered and chose my trading location. My stop loss was at 21.42, I think it was. So you're talking about a 29 pip stop. Now, why did I choose that particular stop loss location? I felt like if the euro dollar was going to pull back and stop at a location besides this one, this would be your kind of other support level. It was resistance, 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 break through it. So it should act as support on a pullback. Now, if this level is going to hold, then I really don't need my stop loss back here, because that's kind of giving it two layers of protection. It's giving it this, it's kind of giving this whole space here, and it's giving all the buyers that should be or probably will be parked over here. If I feel like this level is going to hold, then I want to put my stop loss in between these two locations here, in between this kind of roll reversal level here and the support level here. So I simply chose about 30 pips roughly as my stop loss. I didn't feel the need to go too far into this zone because it's only about 110 pips wide. And so if I'm going to, go much further than this, then I might as well just go below here and use this as my defense. At the same time, if I think the market is going to hold here, well, then I might as well just buy there as well. So bottom line is I felt like this support level would hold. I didn't need a huge stop loss. Place it over here, 21.42, 21.42. And if you notice, when the market did break through it and hit this on that candle there, the market did break a little bit through it, but it found a strong amount of buying orders and then it just took off. And you'll see that there was no pin bar on the daily, there's no pin bar on the 4 hour, there's no pin bar on the 1 hour. So when you look at this whole thing, you realize that candlestick patterns would have completely missed this trade, a perfectly good trade at a perfectly good trade location, and you would have just completely missed it all, and you'd be not profiting 160 or 170 pips right now, which I'm sure you could use right now. So that's my stop loss, that's my entry. In terms of my take profit, since we're in kind of a long-term or a medium-term corrective structure, which is pretty well defined, I feel like the market is most likely going to go to the other end of the structure, and it could find some sellers there and oscillate back here for a little bit, or it could break through. But I feel like I should be targeting the other end of this structure. So I put my target just a few pips below this, about 24.50. I'm totally open to holding it till 25 or maybe even the top of this. But I feel like the closer you get to here, and especially 125 being a big round number, the greater the chance that some sellers will come in and reject it just a little bit early. So just a little bit below it, capture as much profit as I think I can within a reasonable amount of accuracy. And so that's it. That's how I chose my entry. That's how I chose my stop loss, my take profit. You've seen the price action context, which I've explained in terms of why I'm doing this. So that pretty much explains my euro-dollar trade. I hope you enjoyed this video. If you did, make sure to give it a thumbs up along with share with others. And that's pretty much it. I hope you are profiting from all these good trade setups lately, and I hope to be working with you soon. Until then, good luck trading, everyone, and I'll see you in the next video.